Hello to anybody watching. It is August 15th, and I've got a good one for you today. We're going to do rips and dips. This is something I'm going to try to start doing about every week. We're going to go over a handful of stocks that went up, a handful of stocks that went down. We're going to talk about it, There might be some opportunities where people take profit. There might be some opportunities where people want to buy a dip. So that's what we're going to go through today. First off, we'll go over the broader market. We got the S&P 500 up a little bit less than 1%. And, not as fun of a week as the week prior where it ripped multiple percent, but still a lot of individual movers that provided opportunity this week, regardless of how the broader market moved. So still a pretty interesting week. We've got some good ones. There were some heavy hitters this week. It was pretty crazy. So yeah, we got the S&P 500 up a little bit less than 1%. Something that I like is that slower weeks like this, even though 0.85%, which is kind of, I think it's around what it moved. That's, pretty good in the grand scheme of things. That's a solid week, but, we've seen crazier. But more normal week like this really lets you see what is showing relative strength and relative weakness. So, it gives us an interesting setup, I'll explain. So, the first ripper I've got is none other than Nebius. So Nebius had a killer week. Honestly, I might have been better off saving this for last because this was a home run week for Nebius. Good earnings, and they were beat down. You know what that does to a stock? It makes it go up 48% in 1 week. So its all-time high is sitting right under 300. It's about 299.86. My chart's telling me that at least. This week, it went from under 190 all the way up to 277, a crazy run. And this was off good earnings, and like I said, the stock was beat down, so these earnings were kind of make or break, and they hit it out of the park. So a lot of money came right back in, and you caught some sympathy play from CoreWeave. CoreWeave had some good earnings too, and they went up as well, but the focus for this past week, for me at least, was I was more impressed by Nebius because that was just crazy. Like the one day it was up, I think it was up almost 30% the day after they reported earnings, so very impressive. It's not too often you see a bigger name like this move 30%, but with the climate of the market with AI and all that stuff, when an AI related stock is beat down and while the broader market goes up a little bit and they report good earnings, you're going to see them tear like this, and that's exactly what happened. So really impressive for Nebius. Definitely a ripper for this week. I'm going to switch over to a dipper now. We got Apple. Now Apple, it's nothing crazy. It was down about 2.5% around there. But it's just not what you want to see. Apple was flying very high, especially with the broader market coming down. AI trades kind of getting a little risk off. Some people taking money out of those more speculative individual stocks. Apple really shined because they have a lot of cash. They're not like all in on AI. So when the AI trade kind of fades out a little bit, Apple just catches a lot of strength because it's a safe haven, So Apple was doing really, really well, and then they reported bad earnings. Well, I don't know, you can call them bad. It was perceived bad. You can't argue with me there. I mean, look at that candle a couple weeks ago. Absolutely just nuked. Dropped from around 344 all the way down to 300, and that's just not what you want to see. But it reclaimed a little bit. All right, it climbed back up above 310 last week, and, it did okay. But then this week that just ended, sunk right back down, and honestly makes the chart look pretty scary. If it doesn't show strength this week and instead it breaks below $300, I don't know. It'd be looking a little scary because especially if the AI trade gets put back on and people are getting more and more risk on in the market, the market's up near all-time highs. It might be at all-time highs. So if it continues higher, some people might put some more risk on the table. And that makes a safe haven stock like Apple a little less attractive. If you can make more money somewhere else, that people are going to do that. So they'll pull some money out of Apple. But we'll ultimately see. There's still a lot of volatility in the market. Things can change overnight or within 10 minutes. If you've been looking at the market for more than a couple weeks, you know that. So we'll see with Apple. But for this week that just ended, it's definitely a dipper. You can't argue with me there. The gap down, and it stayed down like this. Each little bar is 1 week. So you can see this little red bar. It gapped down from the week prior and it stayed down. So for now, it's a dipper, but Apple's a strong stock. If you look at all those weeks in, the past year, it can climb up no problem. It has no problem doing so in the right environment, so you don't want to write it off, but for this week that just ended, It's a dipper. Sorry, Apple. Now we're going to go to another ripper, and that's going to be SanDisk. Now, SanDisk is the golden child this year. Absolutely, it was on a tear up until the middle of June. Then it got cut in half. It went from about $2,350, which was crazy given it was at, $30 a year prior. Went all the way up to 2,300 and some change, and then it got struck down. It broke down below $1,000. When was that? The end of July? And look at it now. It went below $1,000 at the end of July, and just a couple weeks into August, and it's back up to $1,600 and some change. Absolutely crazy. And, the chart's looking pretty good. It had a really, really, really strong correction and sell-off, but it's regaining some footing, so the sky's the limit with this thing. Who knows if we've seen the craziness of it, and, that was that, but I wouldn't be surprised to see this thing continue to climb and climb and climb, because people love it. People love it. Micron and SanDisk, people love it because the memory bottleneck is real. And I mean, you can't deny that it's real. Look at this chart. You can look at Micron. It's the same thing. They just exponentially grew over the past year as the bottleneck maintained. So we'll see. There was some news about China making memory, and that's kind of, what really did some damage to SanDisk and Micron. But I mean, people are hype about it again. I don't know what to tell you. I think one of them reported earnings. I could be wrong there, but there was just a lot of positive news. And they're just really strong. Micron, sure, it went from $30 to over $2,000, but its market cap is only at $250 billion right now. So we've seen companies just run and run and run. A lot of companies are above that $1 trillion mark. Micron took off, and, Micron's, I guess, a little bigger, but still, it went from being nowhere near worth $1 trillion market cap, and then it broke it not too long ago. I don't know if it's there right now, but it was back when it was, up above $1,000 a share. It definitely was. So SanDisk, it could have some more room to run, but we need to see the money actually come through for them and not just have it be AI speculation for the future. So for now, though, for the week that just ended, definitely a ripper. SanDisk did what SanDisk does, and it absolutely ran. It got a 37% pop this past week, and we'll see what it does this upcoming week. I would not be surprised to see it continue, because if someone's looking to get in SanDisk and they're like, oh, I missed the dip, they might get some FOMO here seeing it rise because you've still got meat on the table to get back to all-time highs. So we'll see, but at least for this past week, SanDisk, absolute ripper. We'll see what happens next. For the next dipper, I'm going to give you Google because, again, nothing crazy. Google went down a little over 2% this past week, but it's a dipper. You don't like to see that with Google, of course, because, I don't know, Google's CapEx is crazy. They're in on AI. They are going in on it. And they had negative news related to AI, which really took them down. So even as risk on is, heating up, Google's not catching any of that hype, because I believe they delayed a Gemini release or something with Gemini. And when they're spending that much money on CapEx, people are like, how are you delaying something related to AI when you're spending so much money on it? So that really just had some people sell it off and probably move to different names that are, have kind of the wind behind their sails. So right now, Google this past week, nothing crazy, a couple percent dip. Google's another strong one. It's similar to Apple, It had a great past year. I would not be surprised to see it, get scooped right back up because it's Google. One positive headline can turn everything around and have it rise back up towards that $400 level, which it was at just, a couple months ago. But it's going to need something. For this past week, it's definitely a dipper because a lot of other stocks were partying. This thing was just sliding down throughout the week. You can see it didn't even try to make, a nice high this past week. It just kind of slid down and stayed down. So nothing crazy coming from Google this past week. Sadly, it's a dipper. For the next ripper, I've got everybody's favorite stock. I've got SpaceX. Now, SpaceX, it didn't end with a crazy week. It ended the week up a little bit more than 4%, but at its peak, it was up over 12%. It was looking really good, especially because you can see it went all the way down to $104 a share. It went from its high of $225 all the way down to $104. It was getting bled out. It was just sell, just day after day after day. It was getting crazy. But, it's still SpaceX. Even when it was at $104, people are like, this is still extremely speculative because they just burn money. They're not really doing anything yet. So, like, it's still a big gamble. But a very important thing is a lockup period ended. So a lot of the insiders or like the angel investors, like those insider shares, a lot of them are locked up. But this past week, I believe it was it the 9th? I don't know. Don't quote me on the date, but recently a lockup period ended, so a lot of shares hit the market. A lot of shares hit the market and were able to be sold, but you didn't see much selling pressure. The lockup period ending is what scared a lot of people. That really contributed to a lot of the slide that we saw in SpaceX. But once that selling didn't come when the date hit, people were like, okay. And then they put some money in, and you could see it absolutely tore from $104. It closed this past week at a flat $140. Really impressive. So what's going to happen next? I don't know. But for this past week, SpaceX is definitely a ripper. Really impressive, especially with how much hate it gets, for sure. For the next dipper, I'm going to give you Amazon, because Amazon had a sad week. No other word to explain it but just sad. You can see the week prior it had a red candle up there, after the week before that being very, very green. And sadly, this past week, the red candle followed through. You would like to see it, find a bottom and move on up higher and look like a nice little, just another big green candle to start just continuing higher, but we didn't see that. We saw it continue downward. It went down a little over 4% this past week, so that's pretty decent, especially for Amazon, such an established company. You hate to see it, but ultimately, I don't know. I mainly contributed this one to the list because I want to explain something after we get past this last ripper, but Amazon's a loser this past week, went down 4%. We'll see what it does next week. Again, it's like Google, it's like Apple, it's Amazon. It's a huge company. So if the broader market moves higher next week, I wouldn't be surprised to see Amazon catch a bid and start to rise back up a little bit, but for this past week, it was definitely a dipper. All right, and the last ripper I've got for you is SMCI, Super Microcomputer. Now, this is an interesting one because it was up 28% this week. I believe they had some good earnings, and like I was saying, the risk on trade is getting applied more and more. So it had a great week, and it's real interesting because this thing is pretty speculative. I think they were accused of cooking their books. Probably, that might have been the dip you see there on the chart where it went from above $30 down to about $20. So they've had some controversy in the past for sure, but they make some like really good money for what their valuation is. It's just because of those concerns that people have to where it's priced really, really low. So if they can dodge those mines and not get hit with, being delisted or, just accused of some terrible stuff, then SMCI might just go on a legendary run. We saw, it was probably 2 or 3 years ago at this point when SMCI was first on the come up. It went through a big stock split. So it used to be worth like over $1,000 a share, and this thing went on a crazy run. It was kind of like SanDisk and Micron now. SMCI went from, it might have been under $100, and it just absolutely straight up over $1,000 a share, and then it did a big split. So it's gotten a lot of attention before. Again, if it can dodge those bad regulatory headlines and just controversial headlines, we could see it run up again. But for this past week, definitely a big ripper. 28% is nothing to joke about. That's a very, very nice return. So shout out SMCI. They had a good week, and ultimately, as you can see just a few months ago, when they have a good week, it can continue and they can go up really, really quick. So we'll see what happens this next week. This one will be pretty exciting. Alright, so those are the rips and dips I've got for you. We got Nebius, SanDisk, SpaceX, and SMCI as rippers, and Apple, Google, and Amazon as dippers. Now, before I go, something that I thought was interesting is pay attention to what's ripping and what's dipping. So, again, small sample size. I only chose 7 stocks out of the hundreds or thousands that are on the market, but what I think is interesting is it's pretty easy to see some Mag 7 stocks that are down this past week, but all these risk-on, more niche stocks went up a lot. There are a lot more rippers out there, trust me. I was looking through, I was like, ooh, that one's good, that one's good. Like, a lot of these niche, smaller individual stocks had strong weeks. and the broader market's at all-time high, but these Mag 7 stocks just dipped. So this upcoming week, if these Mag 7 stocks that were dips this week become rips, it might get pretty hectic. We could see more price discovery with SPY. We could see these Mag 7 stocks come back up. And if that happens, these niche individual companies, you might see some crazy flyers, especially if they get any type of headline or any type of good earnings. In that market environment, you might see some stocks go on an absolute tear because there's some bargains out there still. Like I'm looking at my watch list now, Intel at 102, pretty wild. You've got a bunch of them. AMD's at 514. Now, AMD's up pretty high still, but there's more meat on the bone for a lot of these stocks. So just pay attention to what's catching some positive sentiment if the broader market continues to move up higher. And good luck. Go make some money. So I hope you enjoyed. Thanks for watching. I'll see you later.